Hello friends, welcome back to my YouTube channel. Today I am going to discuss a new concept from accounting for share capital topic. In the previous video, I have given the various journal for various transactions. If you are very new to this topic, you can go and watch and the link is given below. Well, let us come back to our topic. In this video, we are going to include two new topics, that is premium and expenses. Whenever any shares are issued at premium, for these you have to pass a journal. The journal will be like equity share allotment account debited to equity share capital to securities premium reserve. Remember, if the premium are included in allotment, but if premium are included in first call, then your journal will be equity share first call account debited to equity share capital account to securities premium reserve. If there is an expenses, then the journal will be expenses on issue of shares account debited to bank account. Now after passing these journals, if there is an expenses, you have to write off that expenses. For these, the journal will be securities premium reserve account debited to expenses on issue of shares. The amount will remain same. In order to understand perfectly, let us solve one practical question.
Suppose Assam Tea Limited issued 35,000 equity shares of rupees 10 each at a premium of rupees 2, payable as follows: rupees 3 on applications, rupees 5 on allotment including premium, and balance on first and final call. All the shares were duly subscribed, called up and paid up. Expenses on issue of shares is rupees 5,000. Pass necessary journal entries and prepare balance sheet. Before making an entry for journal, we have to understand the meaning of premium. When any shares are issued at higher price than the face value, okay, this rupees 10 is known as face value. The face value is rupees 10. When any face value amount are issued at higher price, now what will be the higher price? The higher price will be considered as 12. Why? Because rupees 2 for premium are also included. That's why the cost of each share will be rupees 12, and this rupees 2 will be considered as a premium. Now let us solve one by one. First we have applications. As we know that whenever any amount are received in the name of applications, we have to pass to journal. One is for receipt and another is for transfer. Alright. Now for receipt, the journal will be bank account debited to equity share applications account. The amount will be 35,000 into 3 because the company have issued 35,000 equity shares and the cost of each shares on applications is rupees 3. Just you need to multiply and you will get it 1,05,000, and the same amount will have to be recorded on both debit and credit side. Your narration will be being applications money received on 35,000 shares at the rate of rupees 3 per share. The same amount will have to be transferred to equity share capital. For transfer journal, it is equity share applications account debited to equity share capital. The amount will remain as it is. Okay, whatever the amount so received in the name of applications will be transferred to equity share capital. The applications money received on 35,000 shares at the rate of rupees 3 transferred to share capital. Now let us move to the next. Allotment. Okay, in allotment the value is 5, and in this 5 rupees even the premium is also included. Then what is the cost of allotment and what is the cost of premium? We have to separate it. Now allotment will be 5 minus 2 because the premium value is 2. So the remaining value is rupees 3. This rupees 3 will be considered for the value of allotment. You have to multiply for the value of allotment with 3 and for the value of premium with 2. First of all, the amount will be due. Alright. For the amount due, the journal will be equity share allotment account debited to equity share capital to securities premium reserve. As we know that the value of securities premium reserve will be 2 into 35,000 because the issued share is 35,000. Multiply, you will get it 75,000, and the remaining, that is 3 for allotment, will be multiplied with 35,000 shares. The value will be 1,05,000, and the sum of these two will be 1,75,000, which we have to write on equity share allotment. Your narration will be being allotment money due on 35,000 shares at the rate of rupees 5 per share including securities premium. Now, when this due money are received, alright, we have to pass another journals. For these, your journal will be bank account debited to equity share allotment. The amount will remain same, that is 1,75,000 on debit, and on credit 1,75,000. Your narration will be being allotment money received on 35,000 shares at the rate of rupees 5 per share including securities premium. Now let us move to the next. The last we have, and the balance on first and final call. As we know that for applications we have 3, allotment including premium we have 5. Then what will be the first and final call? First and final call. As we know that total value is 12. So in order to get first and final call value, we have to multiply with, we have to minus with the value of applications and allotment including premium, that is 8, and the remaining amount is rupees 4. This rupees 4 will be considered for first and final call because it is clearly mentioned and the balance on first and final call. So the balance amount is rupees 4. First of all, we will pass journal entry for due. The journal will be equity share first and final call account debited to equity share capital. Amount will be 35,000 into 4 because the balance amount is 4. You will get it 1,40,000. And for equity share capital also the value will be 1,40,000. Your narration will be being first call money due on 35,000 shares at the rate of rupees 4 per share. When the amount due are received, for these your journal will be bank account debited to equity share first and final call, and the amount will be same, that is 1,40,000. Narration being first and final call money received on 35,000 shares at the rate of rupees 4 per share. Next, we have to pass journal entry for expenses. Okay, when 35,000 equity shares were issued to the public for subscription, there was an expenses of rupees 5,000. For these, your journal will be expenses on issue of shares account debited to bank account. Amount is 5,000 as it is clearly mentioned in the questions. Now that amount of 5,000 expenses will have to be written off. Now from where we are going to return off this 5,000, we are going to return off from securities premium reserve. So your journal for return off will be securities premium reserve account debited to expenses on issue of shares, that is 5,000 on both debit and credit side. Your narration will be being expenses written off. Now let us go for the balance sheet for these questions. before going to the balance sheet, we need to understand the format. As per the schedule 3rd of Indian Companies Act 2013, you have to prepare balance sheet in vertical form. All right, so you have to learn a new balance sheet format, that is vertical form of balance sheet. In HS second year, you have learned about the balance sheet, how to prepare in the horizontal form. Now in vertical format, the first things that you need to write is equity and liabilities, and under equity and liabilities there is a sub heading, that is shareholder fund, share applications money pending allotment, non-current liabilities, and at last current liabilities. And on asset side you have to write two things, that is non-current asset and current asset. This is a very simple format, and the amount, the final amount will be written out here. Okay, you need to know that the amount will be written in this column. Now let us solve practically. As we know that the company have issued 35,000 equity shares at the rate of rupees 10 at a premium of rupees 2. Now equity and liabilities, as we know that under this we have shareholder fund. Now what is the total amount of fund the company will receive? Okay, as we know that share capital amount will be 3,50,000. How that amount has arrived? Let's see. The share issue is 35,000 and the cost of each share is rupees 10. Then we will get it 3,50,000. Okay, so this is the share capital value. And reserve and surplus, the premium amount will be considered as reserve and surplus. Now what is the premium? That is rupees 2. And what is the total equity shares? That is 35,000. Then we will get it how much? 70,000. Out of that 70,000 you have to minus the expenses of rupees 5,000. Then we will get it 5,000 minus 70,000. Okay, we will get it how much? Minus 65,000. We don't have to consider this minus value. Okay, so the value for reserve and surplus is 65,000. The sum of these two value will be 4,50,000. And in asset we are going to write the same amount, because we know that the amount on both liabilities and asset has to be same. So since the company have issued 35,000 at the rate of rupees 10, they have received 3,50,000, and for reserve and surplus in the name of premium they have received 65,000, and the total sum value is 4,15,000. And this 4,15,000 is a cash. Okay, they have received in the form of cash. So as we know that cash is a current asset, so we are going to write the cash value directly here, that is 4,15,000 in the name of, or under the name of, cash and cash equivalent. So this is the simple balance sheet which is very easy to understand. Now after the preparations of balance sheet, we have to make a notes on account. Okay, how you have got all those value, you have to make a notes. For this, the another format will be like this. Okay, notes to account, we have to write particular amount and amount. As we know, for share capital, we know that 35,000 equity shares were issued at the rate of rupees 10 each. Okay, then what will be the amount? That is 35,000 into 10, we are going to get 3,50,000. Now all the shares were duly subscribed. As you can see that duly subscribed, called up and paid up. It means whatever the amount the company have issued to the public for subscription, they have received all the amount. Therefore the amount so received will be 35,000 into 10 is equal to 3,50,000. And what is the securities premium reserve amount that they have received? They have received 2 into 35 1000 is equal to 70,000. Now what is the expenses? Expenses is 5,000. Therefore the total amount will be 65,000, and cash equivalent will be 4,20,000 minus 5,000, because they were supposed to receive 4,15,000, but they have to deduct the expenses of 5,000, so remaining cash will be 4,15,000. So this is the notes to account. If you have any queries, you can ask to me. Once again, if you are a new viewers, please like, share and subscribe my channel. Thank you. Have a nice day. Be safe all the time.